Hello. Today is Thursday, June 11th, 2026. Here is your daily signal. According to Fortune, Gulf sovereign wealth funds are set to reap substantial benefits from the upcoming SpaceX IPO and their aggressive push into artificial intelligence investments. Historically, these Gulf funds have relied heavily on oil revenues for economic stability and growth. But in recent years, they've accelerated their drive to diversify through technology and innovation, with spotlight initiatives including Saudi Vision 2030 and the UAE's the UAE 2031 plan. Saudi Arabia's Public Investment Fund and Abu Dhabi's Mubadala are leading the charge, investing heavily in SpaceX under Elon Musk as well as a slate of AI startups and major Western tech companies. Government figures like Saudi Crown Prince Mohammed bin Salman and UAE President Sheikh Mohammed bin Zayed are central to advancing these policies. As reported by Fortune, these funds are now poised for significant windfalls from SpaceX's IPO, offering a nicely timed boost to their balance sheets, while Gulf states are rapidly becoming frontrunners in the AI investment race with intensifying competition. Near term, this surge will provide increased liquidity and financial muscle for further acquisitions and global tech investments. Over the medium term, successful IPO and AI outcomes may help reduce dependence on oil, enhance the Gulf's influence over the tech and space sectors, and shift global investment dynamics toward their favor. But with rising regional competition, innovation could accelerate, though investment risks may also heighten as funds pursue similar targets. Next, let's turn to U.S. policy and the new proposals for public equity in artificial intelligence. Fortune reports that, in a rare convergence, former President Donald Trump and progressive Democrats including Senator Bernie Sanders are both advocating public equity frameworks that would give Americans collective ownership or profit sharing from AI companies. The background here draws inspiration from models like the Norway Sovereign Wealth Fund and Alaska Permanent Fund, which use natural resource revenues for public benefit. Implementation would require significant changes to U.S. approaches to tech and capital markets. Key stakeholders identified include Trump, Sanders, and other left-leaning Democrats, as well as major firms such as OpenAI and Google, with federal agencies like the Department of Commerce likely to oversee any system of public ownership. On June 9, Fortune highlighted renewed calls for a direct public stake in AI initiatives, noting this unusual bipartisan convergence around the idea of sharing AI profits or ownership with citizens. The proposals take cues from Alaska, which distributes resource revenue annually to residents. If adopted, the move could spark robust debate over regulation and value sharing, possibly encouraging increased investment in AI research while tackling wealth concentration in major tech firms. Looking to the medium term, a public equity model might increase federal oversight and even redistribution of profits to citizens, with major implications for U.S. AI competitiveness, depending on how legislation is shaped. Shifting focus now to early-stage investment, TechCrunch highlights the rise of captive LP networks as a new mechanism for funding startups. Justin Earnest, founder of Sabertooth VC, invested nearly $400 million in hot startups like Anthropic, Anduril, and SpaceX using such a network, bypassing the typical year-long process of raising a formal venture fund. Unlike traditional VC funds, captive LP networks rely on coordinated pools of limited partners, allowing for faster, more flexible capital deployment. This approach is reshaping how high-net-worth individuals and institutional investors allocate capital to innovative startups and has already attracted significant attention from technology, finance, and family office LPs. According to TechCrunch's June 9 reporting, Earnest's strategy enabled swift direct investment into top startups, serving as proof of concept for the model's disruptive potential. If widely adopted, captive LP networks could accelerate startup funding cycles, forcing traditional VC funds to adapt as LPs seek greater flexibility and direct deal access. Founders may benefit from faster fundraising but could encounter new complexities managing a diverse set of direct investors, and regulatory frameworks may need to evolve to safeguard participants in these alternative structures. Now, onto the markets. International stocks declined across the board, with Germany's EWG falling about 1.8% on the day while France's EWQ lost over 1.3%, and Japan's EWJ dropped more than 1.8% as well. Asia-Pacific regions showed mixed momentum. Indonesia's IDX bucked the trend with a strong daily gain of over 3%, while Hong Kong's EWH slid by nearly 1%. Commodities were largely negative. Gold dropped sharply by over 4% with GLD leading losses, and silver's SLV tumbled more than 2%, while US oil USO rose about 2.3% for the day. Platinum fell by nearly 3.2% with PPLT losing ground, but agriculture edged slightly higher in DBA. Among the S&P sectors, the SP 500 dipped about 1.5% with market-wide weakness led by stocks and semiconductors, which fell around 3.7%, while real estate XLRE was nearly flat and healthcare Roman 45 softened more than 1%. Today's top gainers included Iraq, which soared 951% to 18.75, and CPOP, jumping over 536%. Losers featured QSIO, plunging 98% to 0.0068, and MLAKU, down 68% to 3.6. That's it for today. You can find more news and details on our website. Goodbye.